think we have everybody in session now, so we will go ahead and get started today. Today is President's Day, so thank you for joining me. My name is Dave Aquino, and I'm the Stocks and Options Live Trading Room Specialist for Value Charts. I run the live trading room every day, and because the markets are closed, I want to give you this special session of the Everyday Profits webinar. Basically what it's like to make it and make a living trading every day, and what are some of the strategies that we use that can consistently bring in both good trades and consistent profitable profits on a day-to-day, week-to-week, month-to-month basis. So let's go ahead and get started. Okay, those of you that are familiar with my webinars know you could send in questions anytime you want, and that you can go ahead and submit them as they come to mind. That way I can answer them as we go, or if I'm going to answer them later on in the webinar, I'll answer them then, or at the very end. Feel free to re-ask your question if I don't to touch base on that. This session is being recorded, and I believe that the information that's contained in this webinar should be able to apply to multiple different types of trading. I primarily focus on stocks, options, index, things like that, but also you can trade this with futures. So definitely, Michael, that is an area that you can carry this over to. Okay, really quick risk disclaimer. I'm not going to read it to you word for word, but I would encourage you to read it in its entirety. That we want you to know that trading or investing carries a high level of risk and is not suitable for everybody. You should consider your investment objectives, your experience level, and your ability to tolerate risk when you start any sort of trading program. Now, this content is subject to change at any time without notice, and is provided for the sole purpose of education and helping you make your own investment decisions. Now, we've done our best to ensure the accuracy of the information contained herein. However, we are not liable for any loss or damage which may result directly or indirectly from such content, nor your inability to access such information in connection herewith. Now, any past performance results are shown for illustration and example only. They are hypothetical and as such have many inherent limitations. Now, no representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance of any trading system is not necessarily indicative of future results. CFTC Rule 4.41, this is a U.S. government required disclaimer. The CFTC wants you to know that trading or investing carries both a high level of risk and rewards. Now, you must be willing to accept them in order to invest in the futures and options market. Don't trade with money you can't afford to lose, and this is not a solicitation nor offer to buy, sell futures, stocks, or options on the same. Again, no representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance of any trading system or methodology is not necessarily indicative of future results. If you have any questions on these disclaimers, feel free to contact us at Microquant. Thank you. All right, a little bit more information about me. I am a 1995 graduate of Vanderbilt University. Shortly after graduating, I became a full general securities licensed broker at the ripe old age of 23 with Merrill Lynch. I was there for a number of years. Then I joined the Vanguard Group's high net worth department, and then transitioned over to Vanguard's asset management service. This is a service that the Vanguard Groups give to ultra high net worth clients. And as a senior advisor in that group, we managed client households. Specifically, my job was to develop cash flow and tax loss harvesting strategies for highly appreciated stock, utilizing options. So a lot of experience there. And I've been in the stocks and options live trading room going on, I believe, 23 months now. And enjoyed all my time there trading with our traders, and look forward to more trading going into the future. All right, so everyday profits. Basically, everyday profits is a webinar is going to cover why should we trade intraday? What are some of the benefits that we get from utilizing an intraday time period to maximize our profits and to generate a daily income? How much can you make a day trading every day? And then once you decide to do that, what are the rules for great intraday trades? What should you do? What should you look for? And I'll show you proof of these concepts and trading opportunities as we trade every day intraday. Okay, what now? Okay, so you convinced me, Dave. There's a lot of opportunities here. What trade setups should work? How frequently do they work? I'll be talking about what I call the magic box and how when you trade the magic box and stay within certain trading parameters, over the long term, you're going to be profitable. Okay, we're going to talk about the concept of trading the mid-morning reversal and how you can make money just by watching the clock. Again, these can be traded with stocks, ETFs, futures, all those kinds of vehicles are very good for trading intraday. All right, I'll also give you some guidance on gauging the strength of the various markets. I'll show you how to perceive those the relative strength and basically explain what does that mean to you in your trading. What should you be looking out for? How do you get to know what the market's mood is? Is it easygoing? Is it kind of a back and forth seesaw kind of day? Or is it a really strong breakout kind of trend? And I'll show you proof of ways to make money in both of those markets. Okay, so before we really get started here, just want to ask a question because I want this to try to be interactive. Feel free to let me know in the questions box if you want to share with me. Yes, this is being recorded. With your job or whatever your profession is right now, how much do you make? Okay, how much do you make? Actually, my question is, how much do you make every single day? When you go into work and you come home, basically, what is your ticket punched at? What do you make? Now, a good way to do this and think about this is what is your monthly income? We have monthly expenses. Almost everything we buy tends to be broken down monthly. So what is your monthly income? Okay, now take that number and divide it by 22. Okay, whatever it is, divide it by 22. That is roughly your daily income. Okay, so we used to call that bringing home the bacon. Old school folks. That's good. That's good. Very nice. Thanks for sharing. A lot of those numbers are coming through. This is more so for me, for you, and not for me. I want you to think about that. So your monthly income, let's say you earn per year $30,000. Okay, $30,000. That's roughly $2,500 a month. Now, $2,500 a month divided by 22, we're talking roughly $114 a day. I know it's hard for some to kind of conceptualize that because to us, you go into the store, you buy something, it could easily go over $100. I mean, you go shopping on a weekly basis, that number is much bigger than 114 a day. I know I have 13-year-olds. Okay, so that number is looking pretty small. So anyway, I want you to just know what that number is, and we'll take it going forward because I do want you to think as we're going along here. What would it be worth to you to boost that number? Say 114. If you make $60,000 a year, that's what's that? $228 a day. Make 90,000. You're talking about basically $350 a day. What would it be worth it to boost that by say $50 a day or $100 a day? Okay, so that's a very interesting concept, but you can see what it actually could do to enhance how much money you can bring in throughout the year with those daily numbers. Okay, so let's go ahead and jump in the subject. Why trade intraday and what are the benefits do we get? Okay, The interesting that I find about trading every day is that every day is different. Okay, it's in a way I say that, but again, every day is sort of the same. It's like you're not twins, but you're kind of like cousins. You're similar but different. So it's already a very interesting concept that every day when we step into the market, it's a different day, but it's similar to the day that preceded it. That makes it very interesting because the market is always changing, but by utilizing the strategies we use every day, it's easy to adapt to that environment. And again, yesterday won't be as different from today as, say, something last month or last year, but it's if as long as you know what to look for, you can see ahead of you and see ahead as to how the markets are changing. One aspect of trading that I like extremely is that when I trade every day, I know what I made. I know my daily profit or loss. I walk away every day from the markets, hopefully, with money in my pocket. That's the one primary benefit of trading intraday. You know what you did. Okay? And fourth, I guess I like this just as much, I don't have any overnight exposure. I don't have to go to sleep knowing that I have gains or losses or open positions that might take a big move one way or the other. Now I say that that pertains to my intraday trading portfolio. I have other longer term swing trades and position trades on, but from the standpoint of the money that and the account that I trade going in every single day, I don't have to worry about overnight exposure to those assets. They're in cash, they're safe, and I have profits from my day, and they're away from where the market can take them back. All right, the next question again that usually comes up is, how much can I make every day? Now, I'm not tiptoeing around it or dancing around, but again, every day is different, but each trading day is similar. Again, it follows similar patterns throughout the day. There are active morning periods. That's where we usually find consistent range-bound types of trades. But then we also have days that we have those really strong potential breakout moves occurring. Okay, here's one example of a kind of back and forth sort of day. Give me a second here. Let me get my pen. Okay, so you can see the morning period bouncing around. Now this is the QQQ. It could easily be the NQ. It could just as easily be the ES. It could be the SPY. It could be an individual stock. But this particular one has nice, easygoing price action. And then we establish the morning range. And then from that point on, we fall back. And we have some nice, easy price movement. It's active enough that we can make money, but not volatile or choppy that would complicate our system. All right, so this particular trade that I took, again, bouncing around, the NASDAQ was the index that we were following. It broke above, made the single top, and then we fall back into the zone of the magic box, the opening range. So it comes back down, and I actually traded it with both Netflix and Priceline. I trade with options. These are trading same day. We can get into the specifics of that later, but roughly trading about 15 contracts a piece, made about $5,000 on that one pullback move right here. Again, that's one aspect of everyday profits that I teach, and with 15 contracts, we're talking roughly about $150 per contract for that one little move. Very consistent type of setup and a very consistent way to make money in the markets. Once you get through the active morning period that I just showed you, we're talking about another opportunity we get is the afternoon period. And usually it's a springboard. The market has made a directional move in the morning, and usually the springboard afternoon period can do one of two things. it can fade that breakout move and make a nice consistent retracement, or if the market is extremely strong, that move can continue. And there are ways to read the markets to see which move is coming. And that afternoon period usually has one, maybe two good moves that you can consistently trade. Okay, here's an example. Here's the opening range box right in here. Okay, we have an initial breakout to the upside, a consolidation. This is basically a retracement of this move right here. And then we get consolidation for the rest of the afternoon. And then roughly 2:30 into 3 o'clock, we get a nice move higher. This is a continuation move. And then we get a snapback trade right at the end of the day. This was 2 weeks ago, Friday. And very consistent types of price action movements. Oops. So these are setups that we normally take in the everyday profits system. This right here, this continuation move in the afternoon, right here, is something that we traded in Tesla. Now Tesla was about 15 contracts a piece, and we bought the 210 calls. Those 210 calls, roughly a little bit more than I'd say $100, $110 a contract with that, moving higher. All right, that's the one thing that I do teach in my workshop. If you choose to trade options, we utilize, and futures can also be used for this, but we can utilize the power of leverage to magnify these gains. Okay, you can see that one move right here higher roughly brought in about $110 a contract. That is not hard to do. It is very straightforward. You can trade individual stocks with this, and as you can also see, this was in the QQQs. You could have just as easily traded SPY. You could trade the NQ. All those for futures, all those moves are inherent in the intraday everyday profits setups. Okay, but I'm just illustrating the point. My returns are magnified primarily because of the use of options. Okay, so what are the rules to great intraday trading? Okay. Now I know that there are some good questions coming in. It's not that I'm ignoring you. I mean, there's questions of how much money, what's the principle used for those types of trades. Do I trade 5-minute charts? Do I trade limit or stop? You guys ask some great questions, but your questions are all along the lines of, okay, this is a tactical trade. What do I do here? What do I do there? I want you to step back and look back at the opportunity first. Look at the strategic benefit of trading intraday. If you want to see the forest for the trees first, and then you can step in to the Everyday Profits workshop and really get the nuts and bolts. Okay, so what are the rules for great intraday trades? We're talking about each trading day has two distinct halves. I divide it into the morning session and to the afternoon session. Okay, I'm also very careful about the lunchtime lull. In my experience, I've had traders in my trading room. We have an active morning session, and then maybe they take a loss, maybe they have a gain going into lunch, and then I have traders that come in about noon and they're looking for trades. They're hungry for trades. Maybe they haven't made any money today, haven't made as much as they want to. Maybe they have losses, okay? And then they're looking for something to trade. You have to be careful of the lunchtime lull, because what you'll eventually, if you try to force trades when the trades aren't there, you're going to get chopped up by the market, because unless the market moves, you can't make money, okay? You really, really can't. You can say, oh, there's credit strategies and all that kind of stuff. I completely agree. I do credit strategies every single week, but there's a time and a place for each distinct kind of trade. So when the market is not moving at the lunchtime lull, Don't be too aggressive actually trading at those times. Another rule to follow for great intraday trades: follow the index. Most people focus hard on the stock that they're trading. They really want to know what Tesla's doing, okay? But they can't figure out why the Tesla setups they're taking aren't working out. Why is this? Why are some trades easier than others? Well, it's because they don't follow the index. The index is like the tide coming in or going out of a harbor. It's much easier for a ship to travel in the direction of the tide, and as opposed to fighting the tide. So it's the same thing with trades. You want to be bullish and take a bullish setup when the market or the index is being bullish, as long as it's also in the same time frame. Because I can look at the NASDAQ and say, look, the NASDAQ on a weekly is bullish, so on this 5-minute chart I'm going to be bullish. No, you have to keep them in line so that you can follow the index signals, and that will help you to higher consistent trading. Okay? When I say follow the indexes, I say watch the indexes for performance, and how the price action is moving up and down, and then momentum. Momentum is also a factor on the index itself. Yes, Bob, absolutely. All right, I match the index to stocks. Bob's question right there is, do I ever trade IWM? And say sure, if what I'm trading is in line with the index, or if I'm trading the index itself. There's strategies for that also. Okay, let me answer a couple questions. How do I find the index for a particular stock? Tom, that's very easy. If you go to TradeStation and you pop in, or your charting platform, usually it's the case that you can put in the symbol, and then when you pull up the chart, it basically tells you the index it lines up on. I'm sure any finance website will be able to tell you the same thing too. Okay, so the next question is, what trade setups work? How frequently do they work? Now, the trade setups that you select will be specifically tailored to the type of trading you're doing. The one type of trading that we do is range-bound trading. Okay, when I say range-bound, there's a fairly well-established high of the day, very well-established low of the day, and we get price moving back and forth rather straightforward-wise between those two levels. Okay, and what you're trying to do is trade reversals. Here, 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 here on the double bottom, here, etc., etc. I can put a point at each one of those, but what we're doing is trading reversals back and forth. Okay, when we're trading those reversals, you're looking for single tops and bottoms, double tops and bottoms, and I'm usually looking for divergences with momentum. Then I'm also looking for head and shoulders pattern. Basically what that is 1, 2, 3, fall. Okay, or inverse head and shoulders, the opposite of that. Lower, bounce, oop, double bottom, oop. It's been a while since I've drawn an inverse head and shoulders. Bam, bam. There you go. Looks like a W. So also known as a triple top here, or triple bottom here. So you're looking for those range-bound reversals, bouncing back and forth. Do I prefer stocks or options for range-bound trading? I prefer options and any type of trading that we do. Okay, range-bound trading. You can see how the price action of this chart shows you is just bouncing all around. Here's the established high of the day. Here's the established low based on back here. But what happens is after the opening range is established, we break out basically at the middle of the box. We come down, test the bottom once, come back down, go a little bit below the low of the day, the low of the range, bounce into the range again, and go higher. What is this? This trade right here, this is an inverse head and shoulders, a triple bottom and a move higher. That particular trade, we traded in Priceline. These calls right here, roughly 15 contracts. Now, those of you that know Priceline, it's a very expensive stock. We were able to trade it successfully, and Priceline moved very well for us. So roughly $300 plus, about $325 per contract is what we got for that trading Priceline to the upside. Just this move right here resulted in roughly $300, 300 per, I don't know, about $300 per contract for trading Priceline on that bounce. Okay, other trade setups that work very well. When we're talking about breakout trading, what we're trying to do is look for support and resistance levels that normally hold in the stock price, like here and here, and then we see a bounce, come back, and then a breakout. We're looking for strong momentum and strong price action. Can happen to the downside too. Here's the movement, move down, bounce, breakthrough, and continuation lower. Okay. If we are bullish, we're looking for a break higher through that resistance level. Okay. The resistance level that we're talking about is right here. The support level, this support level was broken through on the bearish side of things. Okay, break down lower through support. Thank you, Richard. How do I gauge momentum? And momentum actually is gauged by you can use MACD, or we have MQ momentum as a momentum indicator that we utilize in chart trading. Here's an example. You can see, let's start the day with a gap. We consolidate, we go down, we consolidate, we come down here, make the low of the day, come back up one more time, and right here at the end of the opening range, we have a strong breakout to the downside. You can see my MQ momentum indicator. Do you see how steep this line is? It's heading lower on the time that we're making the breakout, and then we push lower. Okay? So those are the setups that generally work throughout the intraday period. Now, when I say trade the magic box and you'll be profitable, this is what I mean. Okay? The magic box, I define it as the opening range of the market. Now, a lot of you are asking me a lot of specifics about that, but I want to go into the strategy of trading the opening range. Okay? The high price of the opening range is an inherent level of resistance. Okay? The low price is an inherent level of support. You take both of these into account, and normally you have prices that move between the two, back and forth. Okay? You can see that back and forth kind of motion right here. And then when we test the bottom, we have a tendency to go higher. Right? What you need to do to make sure, Fred, the time frame and the specifics of the opening range is actually in the Everyday Profits workshop, but please keep in mind it does include the opening prices of the market. Okay, the most important thing about trading the magic box is that you need to respect the high and low price levels of the opening range, because that will give you well-established support and resistance levels to see where you are in relation to the opening range. Okay, if you're between the support and resistance levels, you want to play range-bound type trades between the two. Look for retracements back and forth. Now, if we're above the high, then you're portraying a bullish breakout trade to the upside. If you're below the support level, you're looking for breakout trades to the downside. Okay, both of those will take into account any type of price action in and around the opening range. Okay, here's the same example. I talked about it earlier. Once you've tested the low of the opening range, you can see that the market goes through that momentum, and then it actually becomes green and starts to move higher. That is how you read support and resistance on the low and high of the opening range. Again, trading back and forth can result in some pretty nice trades. Here, roughly 15 contracts a piece again. We're trading both calls and puts. Again, what you're doing is trading back and forth, back and forth. Okay, you want to stay with range-bound trades between the two, and you can go both directions at the same time. A question that I normally get is a lot of people say, okay, if the stock on the daily chart is bullish, then do I trade with the trend or counter trend or what? As long as you understand that the price movement in the daily bar could look like this. Here's the low, here's the open, and here's the close, and then this is the high up here, and this is the low down here. Guess what? Price moved between those 2 points. So that's what we have here with price moving higher and lower, higher and lower. So you could even get a day that looks like this. It opens here, comes down, makes a low, comes up, makes a high, closes here. And to everybody in the markets and the news and everything, guess what? That stock did not go anywhere. But to us trading intraday, well, it went lower. It ran all the way back up to the high and then back to the middle. That, my friends, looks like this. Okay, opens here. Okay, goes down to the bottom, goes up to the top, comes down to the bottom, and then closes the day. Okay, you can make money on the downside. You can make money on the upside. You can make money on the downside. You see that? Three major movements, and you get this. Everybody else didn't make money, but we did. Okay? Puts and calls. Very, very doable. Okay? Again, here's the breakout of the opening range. You can see momentum is weak. It's bearish. That's what I mean by weak. And we take a nice move lower. All right? All right, so are there any other secrets might we consider when we're trading intraday? Let me see if I can get some more questions here. Again, the high and the opening range highs and lows are established during that same day. Now, again, the specifics of the opening range can be a little bit variable. It depends on the overall bullishness or bearishness of the open, and also the reversals or breakouts can actually occur within the opening range. So that's why I kind of want to save that, because there's a lot more specifics that you really want to consider that. Okay? All right. And again, so I got some questions that are specific to the charts or the candlesticks or open, close, high, low bar charts, candlestick patterns, time frames. It's almost like you guys are. This is the best example I give my traders. Okay, the opportunity we have for trading intraday is like a freeway. You can make money going north. You can make money going south. On those freeways, it's 4 lanes. We have buses going north and south. We have sports cars going in both directions. We have minivans with kids in them going both directions. But what you need to know is how the traffic flows. It doesn't matter as much about the vehicle or what color the vehicle or what kind of tires you have. Everything is relative to how you implement it. What I'm trying to do is explain the concept of how the freeway works. Okay? All right. So, again, some of the other things to look out for that helps you trade. Okay, trade morning reversals and you'll make money just by watching the clock. Like I told you before, the range bound type trades are primarily trading back and forth. Every day is different, but you can watch the clock, okay? Because there is usually a mid-morning reversal of the opening move. Okay, watch the clock for that opportunity. In the afternoon, majority of the time we get pullbacks. If there has been a fairly strong move into the lunch period, sometimes continuing through lunch, but those pullbacks usually do occur and it pulls you back in the direction of the opening range. Now, on extremely strong days, those breakouts can persist and you have to gauge the strength of the index. And from that point, you can trade and continue to hold those breakout trades from the morning. You just have to evaluate the markets. It's not so much the stock. Lots of times it's the markets. But you have to know usually what the breakdown of those two opportunities are. And trust me, the pullbacks are a lot more prevalent than the breakouts. And then on particular time frames, you are looking at certain days, you get an end of the day snapback. I kind of showed you one earlier, and lots of times these happen when the market's a little extended and the market has a quick pullback at the end of the day. You can definitely use sector-based ETFs. You can use leveraged ETFs. That's definitely a possibility. Since I'm watching the index, why don't I just trade them? Absolutely, Jerry. I have traders that only trade the indexes. They trade it in the futures. They'll trade it in the ETFs. They'll trade leveraged ETFs. The reason why I prefer to trade individual stock is because I get even more leverage. It's the nature of how I trade my options. Okay, I trade it on big price stocks that have a tendency to move big dollar amounts when they do move. I can make a lot more money trading a stock that moves $5 as opposed to an ETF that moves 75 cents. All right, so again, here, mid-morning reversal. I showed this example earlier. You can see the general move is up. Now, this is a little bit early for the mid-morning reversal, but here's this really nice move back into the middle of the box once the initial breakout failed. Nice, easy trade. You could even catch the return bounce right here. Make money on that move too. You just pay attention to the momentum, you pay attention to the clock, and that usually occurs with no problems. Okay, late afternoon snapback. Now this is kind of a snapback on a continuation move. Remember, this is lunch. Here's the move in the morning. Here's lunch. Here's a continuation in the afternoon. And then right at the end of the day, we got a quick snapback. And what's interesting is this move right here from high to low is almost 75% of the day's high and low. Okay? I mean, that's kind of the holy grail to traders. If you can take a trade that will go from the high of the day to the low of the day, I mean, that's perfect. You can't actually get more than that unless you're trading back and forth, but you can't get any more than that in one trade. This snapback actually covers almost 75% of the daily range for the NASDAQ. It was very interesting to watch unfold. All right. Some other tips for trading every day. Gauge the strength of the various markets. Now, you guys have been asking great questions about ETFs. You know the S&P 500 index, that's the spiders. The NASDAQ 100, those are the QQQs. These are the exchange traded funds, the ETFs. And then for the Russell 2000 small cap, that's IWM. And definitely pay attention to those three, because what you are doing is gauging the strength of the various markets. On certain days, you're going to have some markets, some indexes stronger than the others. Now, if they're all strong, that means it's a very bullish day for the entire market. Just recently, these spiders had been leading And then the NASDAQ had been a little bit lagging. In the past week, the NASDAQ has been extremely strong. Now, IWM, if you look at its daily chart, it's been in a range-bound trade almost all of last year, back and forth. Now, the range has been pretty wide, but it's been indecisive. There's no major breakout one way or the other. So, but on a day-to-day basis, what you want to see is that all three indices are moving together. If somebody's making a breakout or showing some bullish strength, then you want the other ones to be doing the same. Okay, 80% of the time, the markets move together. Let me see if there's good questions. Thank you. All right, so 80% of the time, those indices all move together. Now, sometimes one index is stronger than the other, and usually it's the case that index will lead the other two. Now, that gives you a good opportunity if you're trading individual stocks in each index, but the majority of the time, the best way to use it as a leading indicator as to what type of setup you need to be looking for. So a bullish setup when the markets are turning higher, a bearish setup if the markets are turning lower. Now, if that, again, this is just what I said, if an index is leading, use it because it's going to give you a heads up that the other markets will follow. And usually it's the case that is the best index to trade going in that direction. Okay, trade the leader and trade stocks that are in the leading index. Okay, now the other thing that I want you to learn how to do is take the market's temperature. Know when the market is in a particular mood. If it's in a seesaw kind of easy trading day, okay, this is what you want to see. Up, down, sometimes a double top, down, up, double bottom. See how it goes back and forth between support and resistance. This day you can make money back. It's almost like I tell my traders, it's like you're walking on the beach and it's after a storm and you walk in one direction and you see a gold coin, you pick it up and you think, oh wow, that's great. And then you turn around the same path you went, like, oh, there's another one. I just came that way. There's another one. I pick it up and I turn back around, and lo and behold, back where I picked up the very first coin, there's another one. And then you kind of turn around in a circle and back and forth. So you're picking up gold coins on the beach, traveling back and forth the same stretch of sand, and you see an opportunity, you walk over, you pick it up, and then you move on to your next one. A lot of my traders associate the way we trade that way. That's the kind of day that really makes it for easy trading. Now, I know other people prefer breakout type days, and trust me, they can be exciting. So if you're in a situation where we move up and we hit this and the market goes around and we break out and we start to run higher, by all means, take advantage of that. It can be the start of a major move on a higher time frame and a great way to make money. All right. Brad, that's a good question. How do you know in advance if it's going to be a range type day or breakout sort of day? From the opening range, you can usually tell is that sometimes you want to go back and forth. But like I showed you, back and forth like this, but you're not getting it. You're going to get, when the indexes are starting to stall, you'll usually have one index that stays against resistance, and then it'll have a kind of a breakout. You'll know, because the markets will usually move higher, and then they'll kind of consolidate, and they'll move higher, and they'll kind of consolidate and move higher again, and then later on in the afternoon, it goes sideways, and then break out again. Okay? There are ways to get in on each of these areas, but you need to know when you have that, because it makes it much harder to trade like this. Okay? You want to trade this type of way when the market is breaking higher or lower. Okay, so back to the original question about bringing home your bacon. Okay, and again, don't go anywhere, because basically we have a bonus question and answer session after this webinar. I'm going to be basically opening the floor and answering questions, anything regarding to trading this way, intraday, everyday profits, and what it's like to really make a living doing this every day. What percentage of the time do you have breakout type days? I'd say anywhere from 1/3 to 1/4 of the time, William. Yep. All right, so what is your daily income? What was that number that you had? Some people had 114. That's for 30,000, okay? What would it be worth to you to boost that income, say, by $50 a day to $100 a day? Basically what I'm asking you is how much would you pay if you could do this consistently 4 out of 5 days a week? What would that information, that knowledge, that technique be worth to you to do that? For say realistically, 4 times out of 5 times a week. Okay? Now keep in mind that $50 a day is roughly at 4 to 5 times a week. 4 out of 5 times a week is $10,000 a year. Okay? It's not for everyday Americans, an extra $10,000 a year of income can make a difference. $20,000 a year can make a big difference. Okay, you can basically cover, who knows, a lot of your mortgage with that, and maybe even a car. All right, $20,000 a year. For those of you that are on retirement income, that you're looking to boost your retirement money because you're not getting it. You're not getting it with your stable income kind of money. You have to figure and learn a way to generate more income so you're not as dependent at eating away your long-term retirement funds. Okay, so what would it be worth it to you? You only you know that number. Okay, so for those of you that are here with me right now, spend your President's Day, I want to give you this special offer. Okay, my Everyday Profits workshop is going to be held a week from this Thursday, February 26th at 6 p.m. Eastern Time. Now, of course, it will be recorded. If you can't make the live session, absolutely make it recording available the next business day. You can watch it over the weekend, be up and trading the very first week of March. Okay, but again, February 26th, it will be recorded. And those of you that can't make it live, or anybody that takes the workshop, I'm always available to answer questions personally by email. No problem at all there. The Everyday Profits program is normally, I'd say this is a $397 program, if not more. Okay, now it has been priced at $297 for a while. Those of you that took your holiday, I'm offering it to you for $197. Okay, and that chat box will have it www.valuecharts.com/day. Okay, so those of you that spent the day with me, $197 is your special offer. This workshop is going to be, it's funny, I always like to say 2.5 to 3 hours. Sometimes the recording goes 4 because of the question and answer at the end. I will not close down the workshop until all the answers are answered. Val, that's different. I'm not really, if you have questions on our indicator bundles or packages, you can always contact us at Value Charts. We can definitely work with you there. But this is for the workshop. Now, let me tell you just one point about the workshop. Okay, because again, I've been running my trading room for almost 2 years. Okay, and I've had a very consistent success in my trading room. I'm not, our goal in our trading room is to bring home funds from profitable, highly consistent trades every single day. That's what we try to do. Okay, and we're extremely successful with it. Now, with that being said, is that people would watch me trade And after they've been in the trading room a while, they get it maybe through osmosis. They ask questions, they see my trades, they take my trades, they reevaluate everything. But I got multiple questions on the of how I do it. Can you provide me some sort of guide or some sort of map on how to trade every day? What do you look at? What do you look for? When do you trade particular setups? And what's your criteria? So I basically built up the Everyday Profits workshop over the course of a number of months to basically condense everything I do into a way of trading the markets step by step every single day. Okay? Now, of course, there are different scenarios on different days, but the workshop, the Everyday Profits workshop, is like a toolbox. I give you a guide, a map, times of day, setups, opportunities, what to look for, support and resistance levels, and how to trade them. Basically, what you will be getting in this workshop is a how-to guide, generate intraday profits so you can walk away with the markets with money in your pocket. Now, I can't promise you that you'll do it every single day, but the setups are consistently there. One thing you learn as a trader is we're not investing, okay? That's for your retirement portfolio, and you have mutual funds, and we do other stuff for that, swing trades. But when you approach the market as a trader, your sole purpose is to generate income on whatever time frame. You want swing trades, intraday. I found that a lot of traders enjoy the intraday because of the same reasons I stated earlier. They don't have overnight risk. They know how much money they made. As long as they follow the program, as long as they follow the workshop, you can do that because the markets repeat similar patterns every single day. If there are any questions on the pricing, you feel free to contact us at support@microquant.com. But it is exactly the same workshop. Okay. All right. So Everyday Profits is a distillation of how I trade every single day. I didn't hold anything back. It's everything you need in order to step into the market, make a profit, generate some income, and then come back and do it again, time and time and time again. Okay, here's an example of some of the proof. Now, I've shown you individual trades. These are trades that occurred over the course of one day. Now, please keep in mind when I trade, I've been doing this a long time, and what I try to do with the level of trading that I do, I try to focus on in my room how to do this on to take consistent trades. Now, on average, I trade roughly 20 contracts per trade. Okay, if you trade one, that's just fine, because I'll show you what kind of numbers we're going to talk about. All right, so roughly this much money divided by 20 contracts is $635 a day. Okay, now out of the chute, you're not going to be able to do as well as I do. Maybe you're a little hesitant. Maybe you take your profits a little early. Maybe you're only taking one kind of trade. But let's just say realistically, you do half as good as I do, and you're pulling out $300 on this day. That is extremely fine for anybody. Okay, remember, $100 a day is basically $20,000 a year, winning 80% of the time. Okay, so with that said, this webinar offer is basically paying for itself over the course of a couple of days. All right. Another trading day. Again, I trade pretty consistently, and we're looking at about 20 contracts here. All right. This day, $625 a day. Now, some of you are saying, oh, you're cherry picking. That's particular days. I invite you guys to join the trading room and You can ascertain what my average per day usually is. We normally do anywhere from 300 a contract, 400, 500, sometimes more. I don't want to toot my own horn, but this 625 is not an overly remarkable kind of day. Okay, it all depends on the setups we get. Okay, there were a couple of days last week we were making anywhere from 125 to $175 a contract because the markets weren't agreeing to how, they weren't moving very stably. So intraday, what can you do? Take about half of that, and that would be realistic. How Thanks. I know some of you are looking at the questions. Some of you are in my trading room and know I'm being really conservative with that. Like I said, I'm not here to toot my own horn because that's not my purpose. Okay, I don't need someone to tap me on the back, say I'm a good trader. My proof is in my results, and I just want to show you what's possible, even at a reduced level of what you can do. This right here is just the entry fee. It's just the cover charge. Come on in and you know you can do that. You can do that. Okay. Do I have the futures trading room? Well, no, like I said earlier, primarily a lot of these everyday profits setups are on the indexes, the intraday movement within the trading day of this index stock securities. Now you can trade that with ETFs, you can trade that with futures, and you can trade that with stocks, and you can trade that with options. My preferred vehicles are options. Okay. And then here's one day. I'd say this is a pretty good day. 20 contracts roughly here. Usually on Fridays, I tend to have very exciting days. And this right here, you break that down, that's $664 a contract per day. Okay. Trade. I said it this way. 664. This is one contract. Like I said, I trade 20 usually, but if you're trading just one, and one contract in a stock is usually, if it's a $10 option, that outlay is about $1,000. So you're trading it back and forth. Now I'm not saying you only need to walk into the market with $1,000 and you could walk out with $600 plus every single day. I don't think that's in any way rational, but it's just an example of what you break it down per contract. That's the kind of return that we're talking about right here. Okay. All right. So anyway, this again is the opportunity. It's easily a $400 or $500 workshop, and I've known traders that were more than willing to pay that for those insights and those secrets. I wanted to make it as available to as many people as I want because I spend a lot of time talking to my traders, and the majority of my traders are just looking for a little help. Okay, they want to do it themselves in the markets. And when they do that, they want to be able to control their ability to make money on their own. They don't want a boss to give them the opportunity. They don't want to necessarily want to go and get a second job. What's nice about these programs is, especially retirees, don't want to go back in the workforce. It's hard enough for me to try to find a job if anyone's going to offer me a position. I want to do this on my own. Okay, I've seen the markets for a number of years. I want to learn how to do this on my own and have the markets provide me my second income. And I think that's a very good way to approach the markets. But you need to know what to do. A lot of traders come to me because they're having a hard go at making money every day. They like the way I trade. They just want to know, how do you do that? How do you do that? Can you tell me how? And I always believe, because I've done the my big fish trading workshops, and I always believe that if I can give traders the tools to do what they want to do for themselves, then overall that's a win-win for everybody. Okay. The workshop is my work for you. Okay, my taking what I know and giving it to you, because at this price, it's a gift, folks. That's a gift. Okay, so please approach it with that in mind. Okay, I, I don't I can trade for a living. I don't need to I don't need to sell you something that doesn't work. I believe in karma. I believe in good fortune, and I believe if I do well by you, the markets in the world do well by me. I don't um, I teach and I do webinars and I create workshops because I want to see my traders succeed. It's not because I'm trying to do something else, and put it that way. So this is for you. I hope you take the gift. All right. This is a tremendous value. And I think that that is a very good start to moving forward in the markets. This is geared to trading intraday. I do also know that I have traders that also work during the day. Their situation allows them to trade certain time periods, and that's when they also trade. The trading rooms themselves, we do have a trial period for you can get in there for 30 days for $7 just to see what they're about. But the platinum membership includes both the futures and stocks trading room. It includes the weekly overview. It includes member only videos on a daily basis. And that program is $197 a month. $197 a month. So you think about it. It's how big of an account do you normally? Well, everybody has a different size account. Your brokers might have different requirements, but usually the minimum is 25,000. And most people say, well, I don't, it's hard for me to trade with that level. I mean, the intraday, you do have a higher requirement, but also what you might want to do is consider just building up with your other kind of trading until you can trade intraday. The majority of the everyday profits trades are directional puts and calls. You can trade spreads also. If you want to buy debit spreads or credit spreads, you can do that with the techniques in everyday profits. But this program really is optimized by utilizing directional puts and calls. But trust me, I have credit spread traders that take this and do fine by it. I have debit spread traders that do okay. Though those are just more leverage um, type of spread setups, but they're the same thing. You can use this for trading the ES, absolutely. Do I ever do credit spreads for day trading? TJ, I have traders that do. I don't tend to because I prefer the leverage I get with directional. The benefit primarily for credit spreads is time decay. Okay, so Fridays would be perfect for credit spreads utilizing these same strategies. Yes, Dimitri, I sure do. All right. Arthur, he's Arthur's giving me a nice plug here. I'll read it, Arthur, and I appreciate it. And he said among the teachers out there, Dave is greatly responsive, answers questions with great care, and his seminars are very comprehensive and truly help you attain better profitable trades and better exits too. He's been with me over a year. Arthur, I don't see your last name, which is absolutely fine. I appreciate your nice words. I really do. So anyway, guys, that is the special offer I wanted to show you. Again, what we're talking about is looking at profits, even if you break it down per day and do 4 times out of 5, okay? $100 a day, that's an extra amount of $20,000 a year. What is that $20,000 a year worth it to you? I can't break it down any more as to how valuable this training is. It's $197, and that is the special offer I can give you. It's valuecharts.com/day. It's in the chat box right now. You'll be able to see it right there. And I absolutely encourage you to take advantage of it. I have about a week left. Get in right now at the special price. In about a week, we'll hold the workshop, and then we'll move forward from there, because I really think that the month of March is going to be quite interesting. We're through earnings. The markets are moving strongly since the end of earnings. I think this is absolutely going to continue, and that way intraday trades are looking really, really good. So keep that in mind, and we'll move forward from there. Thanks, Ronald. How much to make $500 a day? How much capital would I need? Well, what I would suggest is, if you're trading one contract and you're making $100 a day, then you need to work yourself up to 5 contracts. I think that's absolutely, we're trading 5 contracts. It's absolutely doable, but you really need to know what you're doing, okay? Because you're playing with power tools at that point. The workshop is a 3.5 hour workshop, and the recording will be for the entirety plus the question and answers. Okay. All right. Well, let's look at a couple of other things, just really quickly. I know I'm going to put this up because I wanted to open up the floor here. As a thank you for being in the room. I really want to talk about, realistically, what's it like to trade every day and make a living? I mean, do you guys have out and out questions? I can start talking a little bit, but we can definitely do that. I want to make sure you guys see the special webinar offer, because a couple of people are still asking it. It's valuecharts.com/day. If I was to, let's start out this way. If I was to just start out with my trading journey again, I mean, of course, I did this every day as a professional at Vanguard. I utilize a lot of the same strategies, but when you trade intraday or every day, you have different concerns. And I think the one biggest thing is that you should pay very close attention to, okay, is consistency, okay? It's great if you have a $10,000 trade, you put $10,000 in your pocket and you really feel like that was an amazing trade. But then you wake up in the morning and you have new bills, you have new needs, you have new expenses, and you don't know when that next $10,000 trade's going to come your way. So as a trader making a daily living, the one, I think, reason that you should keep first and foremost in your mind, did I spell that wrong? Nope. It looks wrong to me. Consistency. That can't be right. I think it doesn't even recognize it's spelled so bad. I'm a trader. I'm not a. There we go. I think that's better. My wife is a special ed teacher, so I think she's gonna yell at me. I can trade. I can't necessarily spell. All right, consistency. So first and foremost, can you do it on a repetitive basis? Okay, notice I didn't say profitability, even though that is the case, because they do go hand in hand. But after you become consistent in the setups that you take. The next thing is profitability. Okay? Because if the trades are not consistently if you're consistent, you want to be consistent profitably. If you can't do both, then you're going to be consistently losing, or you're going to be profitable inconsistently, if that makes any sense. You have to have both aspects. Do most people stop trading when they hit their daily goal? I think what most people do, and what kind of I do, is I'll slow down my trading. I may trade smaller size, but if the setup that I'm looking for appears, I'll still trade it, because you never know. Some days it's better if you one day. I remember that thing I showed you guys, that the moving back and forth and you're picking up gold coins. That's not made up. I mean, I traded Google one day like that. And by the time I was on my 5th move up, I don't know if anybody in the room here was with me from the trading room that day, but there was one day we had a back and forth trade either in Netflix or Google. I think it was Netflix. It went back and forth. And by the 5th time we were going to trade it in the morning, I'm like, this can't happen again. But it did. And we were like, okay, we'll just take the trade because it's there. But when the market gives you something, you take it, because it's just like on days that the market does not want to give you a penny, then you're going to take that day too. So when you get it, you just trade it. Now, part of consistency is the fact that you are trading consistent setups. You can't be consistent and be helter-skelter. Like, okay, I'm going to trade a spread here, and I'm going to trade this here, and I think this one's a breakout, and I think this one is, we're going to do a calendar. Maybe. So you can't be, you have to be consistent in the way you trade also. Okay. Yes, there are tactics that I teach. There are tactics that I use in the trading room, and they help me do both of these aspects of trading. Okay. Another thing that you always have to do, and this is extremely important because sometimes I have people asking me, well, what's the minimum I want to do in this to carry out X amount of dollars per day? I know that is a very good question, but that's not the question you should ask. You should ask, it's usually asked because there's not much money involved and they want to maximize their profits. Usually it's the case once you become consistent and do this, you want to do very good risk control. Okay? What does that mean? Is that you should risk or put on the table the least amount of money out of your hopefully pretty big trading account, the least amount of money in order to gain a reasonable amount of reward. Okay? It's not hard to make $100 a day when you're risking 100,000. Okay? But if you're risking 10,000, you want to be able to make sure that 10,000 to make $100 a day is positioned well, so you don't have to expose it to too much risk. Okay? Risk control. The most important thing is protection of capital, because if you lose your capital, you lose your ability to trade. And if you can't trade, you can't make money. Okay? So as a full-time trader, those are really the 3 aspects of trading that you should consider first. Okay? Notice I don't talk about, I'm not talking about indicators or setups or things like that. But this is kind of like how you should perceive the world and your trading with a plan from these three points of view. Trade consistently. Do I use this? I'll tell you, some of the best traders in the world trade one or two setups, and that's all they trade. They trade those setups in one or two markets, and that's all they need. When they see their setup, they'll trade it. They already know, based on experience, what is the probability of something good happening or the probability of taking a loss. If they have a gain, they know exactly how they're going to take their profits. Okay? And that is the consistency that you need. Based on the setups and time frames that you use or the techniques that you use, that will dictate your profitability as well as your ability to take a loss and your ability to let your profits run. Okay? You need a strategy for that too. And then risk control. You're always determining where's your stop. And most people always think about risk control from this standpoint. Oh, where do I put my stop loss? How many contracts do I risk? Okay, how much loss can I take? That's not your risk control. Your risk control actually starts with your consistency and your profitability. Because risk control is all a matter of, in the end, once you've selected consistent, profitable trades with a good track record, you know that in the past you've traded this setup, you're making money. Your risk control is basically how many contracts you can do, and then your ability to see the trade setup. And once you do that, you put the trade on, and then the rest is left up to the markets. Once you put a trade on, your ability to influence whether or not it's profitable or there's a loss is out of your hands. The rest of it's the market. Okay? There's nothing else you can do. You take your stop if it goes against you, or you plan your exit based on your profit-taking plan. That's it. And then after that, you move on to the next trade. That's where you can control. Yes, I do cover. I don't sit here and have say 10 bullet points under consistency, 10 bullet points under profitability, etc., etc. But inherent in the Everyday Profits workshop is the idea of taking highly consistent trades at consistent behavior patterns in the market. The trade setups that I show you are naturally high probability, high profitability. I don't like a 50-50 win-loss ratio, folks. That just depletes your mental. It's hard to take a loss. So why? I'd much rather take a small profit with a highly consistent trade than maybe make a big score and get 50-50 winners or losers. I just can't do that. And most people can't, Have you ever noticed when we talk about college basketball, we look at a team like Kentucky and we admire the fact they're 13-0, no losses. Do you see that? You never really, no matter how good a team is, it's very hard to say, you know what, we're like 6-6. We're having a good year. There really been good games and we've had tough losses. Now, see, there's a big difference. 12-0 versus 6-6. So again, the consistency and the profitability of the trades make a big difference. And then risk control is just controlling your, making sure you utilize your stop loss as well as you pick good trades. Okay. No, I don't trade on gut feel. Of course, you develop intuition over time because of your experience, but trades aren't based on gut feel because, that involves emotion. And when you have emotional constraints into the market, into your trades, you're going to have another level of difficulty that you don't really need. Dennis, that's usually the absolute last thing you're asking. I have one trader asking about, various strikes and expiration times. That's actually the last component of stock selection. The main reason is just like my highway analogy. You have traffic going north, you have traffic going south. It honestly doesn't matter That's like selecting like, okay, I'm going to go sit on the bus and because it's going north and I want the second row one on the window. That's the last thing you select. It's important, but there are other more important aspects like, but to answer your question is I trade weeklies. They usually are delta 70 in the money puts and calls. Will there be trade setups every day? Tom, usually it's the case. We absolutely take trades every day. Whether they're going to be perfect, it depends. But like I said, the market repeats itself. It's similar on a day-to-day basis, but they're not identical. No, I don't scan for stocks, Rick. Just like I tend to trade the same stocks because I'm not trading the stocks so much as the movement throughout the day. The stock is just the vehicle. Now I know my stocks extremely well. I can tell you when Tesla is moving strongly, it has a very good chance to make a number of trades every day. I trade Netflix. One thing I can tell you about Netflix, when it's moving well, Netflix has a tendency to move past the profit zone that I'm usually taking profits on, and I usually get more than I expect. Okay? Google can have a good day or a bad day. It just depends on the day. And then if Google has a breakout one way or the other, Google has a tendency to run. And then last but not least, I trade Priceline. Priceline is a big opportunity, but you have to be careful. It's like giving a 13-year-old a chainsaw. As long as that 13-year-old knows what to do with it, you can do a tremendous amount of work. But you better be careful and know which end is going to bite you. Okay? Do I ever trade futures? Nope. I run the stocks and options trading room. So I focus in on the trading vehicle of stocks and options. But like I said, the setups, it doesn't matter. I watch the NQ and the ES and the YM. I watch to see what they're doing. Do I trade Apple? I used to trade Apple like I drank water. But when it split 7-1, I don't trade it anymore. And it's the same reason why I trade. Why do I trade Google versus trading the QQQs? I'm trading the same pattern. Yes, but I can make a heck of a lot more money on a $6 move in Google than I can make in a 50-cent move in the QQQs. Donna, it's the market. Donna's question is, if I buy directional put and call, who don't they buy back the other side? It doesn't matter. I'm selling it to I'm selling it to a group. There's always someone else that's going to buy it. It's just like when you buy stock, you don't consider yourself. If I go out and buy 100 shares of Apple, is the person on the other side going to buy it back for me? If he wants to buy it back, he has to put his order out on the market. I don't have to sell mine. Someone else might sell theirs to him. Okay? So that's just the way that works. Do I sell calls and puts? I do primarily, if I sell premium, I do it with credit spreads. I don't do the individual, because there's certain aspects of the credit spreads that I prefer. You find the option bid ask? Yes, it's a good question. The bid ask price on options can be somewhat wide. If you compare it to stocks, if you compare it to ETFs, absolutely it's wide. But you also have to understand that is the vehicle that has the greatest amount of leverage. So you want to make sure that when you trade an option or an underlying stock movement with an option, you better make sure that it moves enough. Okay? So that question usually comes up when someone usually is trading like, I don't know, MasterCard, Visa, something that's big cap, GM, sometimes Microsoft. And the problem is those stocks, they don't move. You can't make money on a 30-cent move in a $100 stock. You just can't. You can over multiple days, but you can't do it intraday. Are you buying, selling calls and puts at one time or one after another? Well, I'll put a trade on. If I see a directional move, I'll buy a call and then either take profits on that when the move is over, or take the loss, and then I move on to the next trade. Blue, I have no clue. It depends on the stocks and the options that you buy. I've seen them narrower than that, and I've also gotten my puts and calls very close to the mid price. How do you trade from the stock price when the option price is not the same? It is. It's going to move the same way. If you have a stock that goes from $466 to $467, $468, and it's climbing, the value of those calls have to change. They just have to. There's no way for it not to, because Delta is in control of that. Plus the fact I use in the money Delta 70, Delta 60 calls. Okay, if you're buying Delta 20, don't complain to me if it doesn't change in price. There's a reason why those things are cheap. Yes, you get a return when the stock moves, but inherently what we're trading is the movement in the underlying price. The option is just what I'm buying and selling to reflect that. Yes, I when I take trades in my trading room, I always show everybody can see what I'm doing. Sometimes I don't post it to some place out in space because I really can't. I take 3 to 5 quality trades every single day, and then when I do that, they're usually not in there very long. Anybody have any more questions about? I wanted to start with that, making money every day, and if you're looking to do this as a way to bring additional income to yourself, not only do you need to know what you're doing, I mean, that goes without saying, because there are ways you can just dabble in the market, and I hate it when people use that term, because the market is nowhere to play. It's almost like saying, okay, kids, go out and play in the street. Yeah, I'm not going to give any specific trade advice here today. Simon, well, like I said before, this is kind of like a framework, a structure as to how to look at the markets, what time periods are important to watch for, what are the clues that the market's going to be range bound versus breakout. If you get those things, if you have a range bound kind of days, you're looking for reversal type trades. Okay, if you're looking for breakout days, you're looking for to trade with the trend on a breakout level. What are the levels you're watching for potential breakouts? There are clues to those things, and I mean, I'm not getting. They're in the workshop, and I'm going to absolutely discuss those nuts and bolts of trading intraday. Where can you get the Greeks for options like deltas and vegas and stuff like that? Well, your trading platform should have them. I use thinkorswim for my option entry, and it's all there. I'm sure Options Express and some of the other big options platforms have those numbers, but you don't need them perfect. I mean, you don't need them for the intraday stuff. Michael, the momentum indicator for MQ Momentum that I use is the default. Okay. Donna, why don't you send me an email on that? Oh, TradeStation is fine for trading. I use all my charting is done on the ES. The Delta 70 information, when you get your option chain where you have puts on one side and calls on the other, well, basically you can list it by delta, and it's either like it's like a delta 100 is 1.00, a delta 50 is 0.50, that's positive, or if it's puts, it's negative 0.50. How do you differentiate between an opening range breakout versus a fake out? That's a good point, G. Sometimes you can't. Sometimes it depends, because sometimes a breakout, a head fake, will look like a head fake and then it'll fall back into a trading zone. Or sometimes it'll be a retest of the support level and then it will continue. One trick is to watch momentum. Oh, my charting is done on TradeStation. How many days in for weekly options do I trade? Well, Mario, it depends. I trade weekly options. When I'm trading intraday, I trade the ones that expire on Friday. Yes, this will be recorded. All right. Any more questions, anybody? Well, again, I hope you take me up on this offer. It, again, is valuecharts.com/day. I know there's a lot of good questions being asked, and just understand the workshop itself is full of detail, okay? Because you can't trade intraday without a good understanding of the details of how to do it, okay? I can sit here and I'll tell you, hey, watch the opening range, and if it goes higher, go long; goes lower, go short, and just trade back and forth if it stays in the middle. Be like, okay, no, that I give you an extreme amount of detail of what to do, okay? So that way, not only do you know what to do, but you know why things are behaving that way, okay? Because there will become a time, there won't be one day I won't be there to tell you what you should do. And everything will be up to you. So hopefully you get what I'm going to teach you and you can implement it on your own. Because that's I want my workshop to be able to stand alone and be able to help you guys as long as you need it to. Charles, it depends on your trading skills, sir. The one question one of my traders, John, John's asked me if 197 has got you on the fence, okay? If you're saying that seems like a lot of money, one question you ask yourself, when was the last time you lost $197 in the markets and not learned a thing? For 197, not only can you learn it with me live or on recording, but it's something that you can watch multiple times and really, really make a difference in your trading. If I said, hey, look, I'm going to give you a magic bucket, and this magic bucket, you just walk over to that magic well over there, dip it in every day, and you're going to hopefully pull out some water. Maybe some days your bucket will be empty, but on a good day, it'll be absolutely full. Okay, I can't tell you which day is which, but I think if you go through and use the techniques I give you, you won't be disappointed what you get in your bucket, okay? Because the markets will always be there. And you will always have the opportunity to trade. You don't have to worry about, is your company going to cut your pension? Are you going to get laid off? How would you like to have something inherent to you that you know what to do, that you can step forward and provide for yourself? That I think, you'll be absolutely be relieved to have that other course of action that you can take. And like I said, and that was a really good point John brought up, It's like, when was the last time you took a $197 loss in the market and kind of shrugged your shoulders and what the heck just happened? This way, you step in, you invest in yourself, and you'll at least have a really good idea of what happened, but also what not to do. What to do, when, where, how is what this workshop is about. So I truly hope you take me advantage of it. Thanks, everybody. Yeah, if you guys have I understand, Jerry. Thank you. Oh, I've had a lot of traders in your circumstance. I completely understand that. What I would do is this: think about what I've said, and I completely understand your initial hesitancy, and you should be like that because unless you have a good, it's almost like this: if you came to a new country and people would say, okay, look, there's a lot of opportunity in this country, but you need to know where to find it. So go ahead and go find it. Go make your way. And you're like, well, wait, I don't know what to do. I don't know what the risks are. I don't know what works. How do I make my way? And what I'm offering is kind of like a guidebook as to what you should do, when you can do it. But I don't necessarily say, hey, look, go full force, Jerry, and do it. You'll do a great job. I'm always one. Again, look at my number 3. It's risk control. Okay, it's almost like you need to know enough to know what the potential is out there. What are some of the things that I can trade? And then from that standpoint, start small. Start simulated trading. Get familiar with the environment, so that way you can see if you're cut out for it. If you can. Okay. One thing I never do when I do one-on-one mentorships with traders, I never ever judge their potential as a trader, because the person that I think is the ace trader that's going to knock it out of the park sometimes kind of fumbles around and just doesn't have the makeup. And then I can have someone going, oh my gosh, this person better look out because the market's going to run over them. And I always tell them caution, 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 and lo and behold, they're knocking the cover off the ball. So I don't know what it is. Sometimes it's just people finding their niche. Now, what I give you with this program is at least the guidebook and the map, so that you can know where you can try this or try that. Try this kind of trading versus try range bound trading versus breakout type trades. What can I do? At least you'll have a very, very good guide and starting point so you can continue to explore. But by all means, please don't come to me and say, Dave, I tried it with 10 contracts and I had a great day. Because the first thing I'll say is, why did you do 10 contracts? Don't do that. Okay. So please consider it like that. And I really look, like I said, Jerry, the way I always feel about my what I do for my traders is all a matter of good fortune. What I do well for other people, I always believe it's going to come back to visit me. So, and trust me, I coached Little League baseball for years and years. Okay. I'm natural, and I play tennis, so I'm naturally superstitious. Okay, you bounce the ball the same number of times. When I used to play basketball, exactly the same way. So my point is this: what I do and I do for my traders is for your own good. Okay, I know what the map says. I drew the map, so I'm offering it to you, and I think it's a very good starting point. Again, like John said, is like, when's the last time you had a $197 loss? At least this way, you're going to get a whole lot for it. But I really don't think you're going to consider it a loss. I think you're going to consider it an extremely good investment. And I know you will, because I made it for you guys. Okay. Dan, I think you absolutely get a lot out of it. Yeah, the one thing I'm glad is you guys have responded to a value charts webinar, and that makes a tremendous amount of difference to me. Okay, whether or not you trade stocks or you trade stocks or options with me, or futures with Thomas, you I've been in the financial field almost 23 years. Okay, guys, I've been here. I've seen every kind of person, every kind. And there's a reason why I'm still with value charts over 2 years, because this is, we all see our traders the same way, as an opportunity to help people and teach them something good, because the market is not necessarily a friendly place. So I'm just glad to see that you're here, and you're here with me, you're here with Thomas, you're here with Drew. Min takes care of all our people. We have other good people. You guys don't get to see them, but that's why we're here. Okay, so hopefully you take us up on our offer. Again, I'm gonna let you guys go because it's President's Day, and unless you're snowbound, I hope you guys enjoy the day. And if there's anything that you would like, feel free to send us an email at support@microquant.com, and we'll be able to do that. Now, normally I don't take phone call discussions unless it's a consultation. But if you have a question, feel free to go and send us an email at support@microquant.com. I'd be happy to do that. Thanks, everybody. Used to be Washington's birthday. Thanks, Rick. I didn't know that. I knew it was, President's Day, but I didn't know specifically whose birthday. My pleasure, folks. My pleasure. All right, I'm going to leave this up. Again, feel free to take advantage of it. I truly, truly hope you do, because it's kind of my gift to you. So thanks again for being on our list, and hope good luck the rest of the spring in trading, okay? All right, I'll be talking to you soon. Thanks again. Bye-bye.